Welcome to Real Estate Radio Live, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Mike 𝗔𝗕𝗎𝗪, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate.
Thanks for joining us this afternoon, talking anything and everything real estate as we always do on Real Estate Radio Live. And got a lot to get to today on the show. I'm in studio today on my own, and we're going to be talking a lot about economic forecasting, what's going on with the higher housing costs, and maybe getting into understanding Asian investors a little bit more if I have time for that. If not, I'm probably going to push that to a whole nother show because that's a topic that we can talk a lot about with investors and out of the country investors, foreign investors, and that type of thing. So, but mainly want to focus on economic forecasting and where the higher housing costs are going to go. And I think I got a couple emails to go over as well. So we got a lot to get to, and of course it's always an open forum as well. I'll give you the information to call in just a second. But just a reminder for those of you just tuning in, there's a couple different ways you can listen to the show. That is on the radio at KDOW 1220 AM, the Wall Street Business Network, or you can listen to us live online at kdow.biz, or go to the Real Estate Radio Live website. That's reradiolive.com, reradiolive.com. Ton of information on there, not only how to listen to us live online, but also how to get past shows, get our podcasts. We are now on iTunes. Happy to announce that, so that's awesome. And you can download us on your smartphone. If you also want to download our app, you can go to the App Store and download the iHeartRadio app or the KDOW app. So all sorts of ways you can tune into the show. That's what we want, and we want you to definitely give us feedback and reach out to us if you have anything that you want to learn more about from Joe or myself or Tom or any of the other hosts. There's a lot of things that are out there that we can get to, and if you're yearning for that, definitely let us know. Reach out via email or give us a call. And that number is 1-800-516-1220, 1-800-516-1220. You can call in during the show today, and I'd be happy to answer any real estate questions you have. Or you can go online to 𝗥𝗱𝗡𝗡𝗘𝗀𝗪.com. That's 𝗥𝗱𝗡𝗡𝗪𝗡.com. And you can click the Contact Me tab, and you can submit your question while I'm on the air. And we come to you 5 days a week, Monday through Friday from 3 to 4 p.m. with bonus coverage, Mondays, Wednesdays, and Fridays from 2 to 3. So you can definitely tune in all throughout the week to check us out. So there we have it. So let's get into what we're going to talk about today. And, inventory, like I've been mentioning on shows past, I'm not going to do inventory counts today because I think I just did them last week. But we saw definitely a sort of a lull for about 6 weeks. I talked a little bit about it the other day with Brian Crane, and we did see somewhat of a lull this fall with, the stock market going down, and people, a lot of people's wealth, especially in the Silicon Valley, is tied to their stock accounts. So we did see somewhat of a lull, but I think it's picking back up again a little bit, and a lot of things are selling, inventory's decreasing, and that's just natural with the market going, the inventory decreasing now until the end of the year with the holidays and whatnot. I guess the rough numbers were between 1,400 and 1,500 units in Santa Clara County, and I would guess, and my educated guess is that that's going to get under 1,000 by the end of the year. And when we get under 1,000 units active for sale in the entire county of Santa Clara, which I often use as a leading indicator, if we get under 1,000 or 900, things definitely pick up and get hot, because there's definitely more than 900 buyers in the county. I can guarantee that. So whenever you have more buyers than sellers, it creates a good market and creates a bidding style of market. So that's what we see. But let's talk a little bit about the economy and because real estate, this obviously is a real estate related show, and so a lot of the information I'm going to talk about today is from people that are in real estate. Some of our economists, Leslie Appleton Young is the chief economist for the California Association of Realtors, and Lawrence Yun is the chief economist for the National Association of Realtors. So these people are doing this on a daily basis. They provide us realtors with a lot of data and information. Unfortunately, a lot of realtors don't read that stuff, so they don't know what the heck they're talking about when it comes to the economy. But luckily, I do. So that's why I'm doing this today, and I think it's good information for the show. It's definitely good information out for you out there that are property owners, business owners, that type of thing. So let's get in. It's funny to think about. It's really hard to realize, I guess, that we're almost in our 6th year of the economic recovery. It's been almost 6 years. So think about that for a second. It was only 6 years ago that people thought the sky was falling, and we saw one of the worst economies and downturns that we had seen in decades. So really got to kind of pinch ourselves to believe it. And the improvement over the first 2 years of that cycle was really amazing, especially in the real estate arena. And so we're going to get into that today. And like I said, again, a lot of the information I'm getting is from the chief economist of the California Association of Realtors and the National. And so when we dial down into California, it's really, like I always say about Silicon Valley and California, it's not always necessarily representative of the entire country, especially when it pertains to the real estate picture. But we definitely want to look at it because California is often a leading indicator of that type of thing. And the other thing that you want to think about is our economy might still be a little bit sluggish overall as a country, but compared to other countries, we are doing terrific. And so that's something to hang our hats on and realize. And the quote that we often hear is, we're the cleanest shirt and the dirtiest laundry. So that's definitely, it's not the greatest it's ever been in the United States of America, but we're definitely doing much better than a lot of other countries around the world. So that's something to, clap our hands about and be happy about. Two big areas that we look at when we're looking at the economy and how it's doing, where it's going. Obviously, one is real estate, so we are a real estate-related show. Real estate and jobs are really the two biggest things that we like to look at. And two of the things that I'm going to be focusing on pretty much for the first segment. So, and again, if you have any questions on this or questions on real estate, you can call in. 1-800-516-1220 is the number. You can go to the website, 𝗏𝗏𝗡𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏 job situation is good. It's really a good indicator of our national state of health, and job creation is going strong. We're closing in on now about a low of 5% unemployed. So although the employment rate isn't rising since a lot of people are no longer on the labor force radar, so it's kind of a sweet and sour type of stat. One good omen to celebrate, though, is that after 10 years straight with a weak GNP growth, 2% more or less, that's gross national product, with 2% more or less over the last 10 years, we are going to see probably 3% in 2016. So we can't wait to get there next year when seeing about 2% or less over the last 10 years, hopefully. And what they're saying is that we'll see 3% national growth over the next year. So that's a good thing, and that bodes well for a lot of people. And it bodes well for a lot of people across the country, not just in California. In the real estate arena, not a lot major on the horizon. I think sales are going to increase a bit in the country, and that's what they're saying it will be, about 3.5%. And that's really, you can attribute that to continued job creation and rising wages. But the factor there is going to be the lack of inventory of both existing and new homes. And new construction is going to be especially weak. It's going to continue to push prices up next year. New construction really, before the downturn, it was going like wildfire, and it really came to almost a screeching halt during the recession. And, we need new construction, especially in California. But the problem is, especially in the Silicon Valley, is where the heck are we going to build it? And in another article I was reading that this year the forecast said they're going to have about 1.14 million housing units that were going to be started this year, and hopefully get up to 1.42 next year, and maybe almost 1.5 million units in 2017. So the other part of that is, in building these housing units, rental prices are going up, so people are going to want to buy the home. So new construction is going to be a really important factor going forward. And the other big thing, and Brian and I talked about it earlier this week, about how at the bottom of all this, what's driving the home prices and what's driving prices to go up essentially is the cities and counties and how long they're making home builders and developers wait and go through the bureaucracy to get their projects through. And by the time the thing is built, the market could be different. So it's all that red tape that these builders and developers have to go through, and it's creating almost like a backlog of new home construction when we need more of it. So if they eased up on some of that stuff, we could get more homes on the market faster. We can build more homes quicker, and things might be a little bit better. It might ease up the entire inventory level. So just something to think about as far as new home construction goes and where we're going with that. The other thing is that they're saying that we're going to see about 6.3% increase in existing home sales and about a 3.2% median price jump next year. So that's pretty modest compared to what we've seen over the last couple of years, and especially, especially in the Silicon Valley when we saw upwards of 30% appreciation a couple years ago. In 1 year, we saw about 20%, and I think we're going to get into double digits this year, but we'll see where the cards fall at the end of the year. So we're going to see a little bit more of a modest appreciation over the next year in 2016, probably somewhere between 5 and 8% is my guess, and according to the economists, about 6.5%. I think it might even be more near 8%. So we'll see. We'll see who's right. We'll see who's wrong. It's always fun to see how that goes. The other thing is, focusing more in on the Silicon Valley, which has been leading the state in job creations. And by the way, that increase was 12.5% in San Mateo County, about 23.4% in Santa Clara County, and almost 27% in San Francisco. So we are definitely leading the state in job creation, and that's a big thing. That's huge, and that's why people are flocking here to live, and they want to live here badly. To get in, and I just got another minute, and I'm going to go into this on the other segment, but a couple of factors that are slowing down, or shall we say, moderating a little bit and becoming more quote-unquote normal. This is a couple of the factors, and the first one is we're seeing, and this is mainly as it relates to real estate, we're seeing a slight decline in the number of trade-up buyers, and that's really due in part to the drop of the home ownership rate and what happened a couple of years ago. And really the only group that's not declining in home ownership is the 50 and over group. And I guess it pays to grow older, right? And so the younger groups, the younger generations, the millennials, which we've talked about multiple times within the past couple of months, is not buying homes as much. So that's really contributing to a more of a moderation of the market. And I'm going to get into a couple more of the factors of why the market is normalizing, I guess you would call it, or kind of leveling out in some areas. But I got to take a quick break. 1-800-516-1220 is the number. 1-800-516-1220. You've been listening to Real Estate Radio Live. I'm Mike D'Ambrosio. You better stick around. We have a lot more to get to on the other side of the break. I'll be right back. And I'm in studio today and got a lot to get to. We were talking about economic forecasting and higher housing costs and all sorts of stuff today. Love to hear from you guys. If you have any questions, 1-800-516-1220. 1-800-516-1220 is the number. I got an email from a listener that I'm going to get to in the couple of breaks from now when I got some time. I just saw Joe walk right past the door here, so that's why I was looking at him. Anyways, if you got any questions, again, 1-800-516-1220. And this segment's brought to you by Giorgio's Italian Food and Pizzeria and Frankie, Johnny, and Luigi's too. That's the best Italian food around with 4 convenient locations throughout the Bay Area to serve you. So you can go to Giorgio's and FJLItalian.com for more information on their famous happy hour specials. So it's Friday. Who wouldn't like to go out to happy hour? So you definitely want to check that out. All right, let's get back into economic forecasting and really what's going to happen going forward as I see it, and through some of the research that I've gotten from some of the top economists in the country and some of the top economists in real estate, according to Leslie Appleton Young from the California Association of Realtors, as well as Lawrence Yun from the National Association of Realtors. So what we talked about a little bit before the break was what are some of the factors that are going to be involved in the slowing down of the, well, I don't want to call it slowing down because now I'm going to freak people out. I guess you could call it moderation or moderating of some parts of the economy and parts of California and Silicon Valley. So really the number one one of the reasons is there's going to be a slight decline in the number of trade-up buyers, and that's really due in part to the drop in home ownership rate, particularly in the 50 and over age group. That's the only one that's really not declining, but under that, under 50 is declining as far as home ownership rate. So over time, that's going to probably contribute to a moderation of home ownership and people actually buying and selling real estate. So something to keep our eye on and definitely look into down the road when we can track these millennials and other generations and seeing what they're doing, what they're buying, because they definitely have a different mindset than the 50 and over group does, obviously. So just through some of the stats that we're seeing. So that's an interesting one. The second reason why we can see some moderation in real estate and in the economy in general, but mostly real estate, is the share of cash buyers is going down for the third year in a row. And this year it was about 21% in California. I think a couple years ago it was probably more near 40 from what I can remember. So that is a pretty big drop of cash buyers, and it's probably due in part to the fact that it's not as affordable as it was, and they were getting bargains 3 or 4 years ago. So now we're seeing a drop in cash buyers, and it is what it is. They'll come back. It just depends on when and where. So that's one of the second reasons. The third reason, and I can do a whole show about this, is international buyers is down as well. So in particular, Chinese buyers, and I can, like I mentioned earlier on in the show, I might do a whole other show about Chinese buyers. I've done a ton of research on it because they're especially prevalent in the Bay Area and in Silicon Valley. And, just think about this stat. In China, there's over 3 million millionaires as far as in United States in U.S. dollars. There's 3 million millionaires and about 650 billionaires in China, according to that. So just think about them bringing their money over here, and people always wonder why, where they get all this money. And, a lot of them are business owners, entrepreneurs, small number of government officials. So there's a lot more, I guess the answer is there's a lot more rich people over in China as opposed to here in their end. So, but again, one of the reasons why we see a moderation of the economy is because, or of real estate, is because the share of international buyers is down. Only about 4% in all price ranges in California were from international buyers as far as real estate sales. So that's almost half of what it was in 2013. So we've definitely seen a drop in that. And the reasons are obvious. It's, the U.S. is doing better and better while the rest of the world is weak and flat. So they have to pay more for U.S. real estate, and because of a stronger dollar, and that's why you're really not seeing them come over as much. We should though note that the segment that is dominated by foreign buyers, in particular Chinese buyers, is the most expensive areas and the high end. So that's still doing well as far as international buyers and what they're buying in real estate. So international buyers is down. The fourth reason, and I got to take a quick break, is the cost of mortgage money is going to go up, and it will. So we definitely got to keep a look on that, and that could help moderate the real estate market. And the final one is people are staying in their home longer. So the length of ownership has gone up from 6 to about 10 years in 2015. So a couple of those things you got to keep in mind as far as how we can see a moderation in the real estate market, but it's all good. We're doing good. California's doing good, and there's no reason to be freaking out. So anyways, I got to take a quick break. If you got any questions on that, 1-800-516-1220, 1-800-516-1220. I'm going to get to listener email on the other side of the break, and we'll go from there. This is Mike 𝗔𝗕𝗄𝗯 on Real Estate Radio Live. I'll be right back.
For more information on today's program, visit 𝗟𝗡radiolive.com. That's 𝗟Eradiolive.com. Welcome back to Real Estate.
And we are talking about the economic forecasts and higher costs of living in California and abroad. Love to hear from you guys. If you have any questions, 1-800-516-1220, 1-800-516-1220. And this segment's brought to you by Taps Termite. They've been serving the Bay Area for over 45 years. Can you believe that? And Taps Termite's committed to keeping your living area pest-free by using the newest and safest technology. You can call Taps today for a complimentary inspection. How about that? 408-259-5900, 259-5900. And TAP's great partners of ours, and Tim Denner's always on the show, and I'm sure people love to hear from the termite guy. It's something that's a little scary for some people, but it's normal to have termites, so just keep that in mind. All right. On a totally different topic, let's get back into, I've been getting some really good listener email and some good questions, and I have a really short segment here, so I'm gonna get into this one, and I'll probably have to finish it up on the next segment. But here's the question. It said, Mike, I was listening to you on the radio a few days ago speaking about living trust. I've been thinking about starting a trust, but have not been able to determine why I should, other than the time it takes to go through probate and some legal costs associated with it. Are there other things to consider? I'm not too concerned about how long our heir will have to wait to receive our money, and he will have money to pay any legal costs via the inheritance. So many people say a trust is a must if one has a property. I feel I must be missing something. Can you help me understand, Dave? All right, so great question, Dave, and really appreciate you listening to the show. So I sent Dave some information, and so here it is. There's about 6 really good reasons why you should have a living trust, and we've had plenty of shows on this. And maybe Dave missed one of these shows, but we've had plenty of trust attorneys on, and I'll have them on again because I think this is a really great question, really great topic, and it's something that all you property owners out there really need to understand. So why you should have a living trust. Number one is you want to protect the property for certain beneficiaries. And this is seldom mentioned as a reason for a living trust, but it's probably one of the most important reasons. And when you think about estate planning, we think about giving our property to our husband or wife or children or other loved ones after we die. However, sometimes our intended beneficiaries just aren't able to handle the inheritance. And so the big one on this is minors. Minor children are usually the suspects in this case. And a lot of states don't even allow minor children to own property just because they're too young. And so instead they appoint a guardian to hold the property until the minor reaches 18 or whatnot. So, but the other thing is minor children aren't the only ones that might squander an inheritance. And a lot of people would argue that no one under the age of 25 should be given an inheritance outright because they're generally not mature enough to handle large sums of money. They might quit school, buy an expensive car, go to Cancun, and blow the rest of the pot. So, number one is you want to protect the property that your trust is in for certain beneficiaries. So that's number one. There's 5 more really good reasons why you need to have a living trust, and I'm going to get into that on the other side of the break. So you have to stick around to hear about that. If you have any questions, 1-800-516-1220. And you can go to 𝗥𝗱𝗡𝗡𝗘𝗖𝗧.com and submit your question online. I'm Mike 𝗔𝗕𝗡𝗡 on Real Estate Radio Live. Stick around. I will be right back. This is probably the last segment to do it, 1-800-516-1220, and I'm getting to a listener email right now. Excuse me. And this segment is brought to you by Starburst Construction, serving the Silicon Valley for over 40 years. You can visit them today at starburstconstruction.com. That's Starburst like the candy. So starburstconstruction.com. And you can check out all of the sponsor information on my website at 𝗥𝗱𝗡𝗡𝗘𝗖𝗧.com, and all sorts of information on the radio and past shows. And again, I want to reiterate that we are on iTunes now and are podcasting every one of our shows. So you can listen to our shows on the podcast, and it's commercial free, and it's all nice and tidy for you and ready to listen whenever and wherever you are. So we are on iTunes, and we are podcasting, and it's a good thing. So let's get back into this question because there's 5 more things I wanted to get into. And this question was from a listener, and he emailed in about living trust and what are the reasons for doing it, because he just was curious as to, he's not concerned about his heir, getting the money right away and paying legal fees. So what are the real reasons? So that's what we're talking about, and I appreciate the question. So the first answer was, and the first reason to get a living trust is protecting the property for certain beneficiaries. And in particular, I focused in on minors and how it protects them from that, because you don't want to, a 16-year-old and they couldn't because they have to be 18, but inheriting all this money and or property, and they're not going to know what to do with it. So it definitely helps in that aspect. And again, I'm not an estate planning attorney. I'm only just giving you guys the data through all the research I've done and conversations I've had with estate planning attorneys. If you want to get more technical and get into more of the finer details of an estate and living trust and all that, you definitely should talk to an estate attorney. And Joe or myself are happy to put you in touch with some of them. We have a few great ones that we can put you in touch with. So just keep that in mind when I'm talking about this today. I'm not getting too technical because that's not my area of expertise. My area is real estate. But I definitely suggest to all my clients, if they don't have one, they definitely need to get one. So no matter how old or young they are, it's definitely good to have a living trust. So the second reason, and probably one of the biggest reasons it comes up, is reducing or eliminating your estate taxes. So that's the second reason, reducing or eliminating estate taxes, which is, we all love to reduce taxes. So a lot of people might say, though, that a revocable living trust doesn't save estate taxes, and technically they might be right, but there are no provisions in the federal tax law that exempt revocable living trusts from estate taxes. So, however, living trusts are often used by individuals and families to take advantage of certain deductions and credits that are allowed under the tax laws. So that's as far as I'm going to go with that. I'm not going to get too technical on estate tax because, again, I'm not a tax planner either, but really having a living trust and estate planning can reduce taxes overall. So that's something to keep in mind. And that'll go more into the probate conversation, which I'll get into in just a minute. The third reason, and another reason why some of you guys might forget about, is managing the property upon incapacity. So one of the major concerns that we have is dying, but what if we don't die and we live too long? And then you can't manage your actual estate. So managing the property upon incapacity is another thing that you can put in the living trust, and making sure that your estate is going to get handled properly, even if you're still alive but you're incapacitated. So just something to keep in mind. It's something that we forget about. And, whether you want to live that long or not, that's a decision up to you. And that is, going to be a whole nother show. But the point I'm trying to make is that don't forget, sometimes you do need help when you get older, and if you live too long and you can't control, you can't handle your estate, you definitely need to have the direction there from estate planning to do that. So that's reason number 3, is managing your property upon incapacity. And number 4 is the big, one of the obvious reasons is avoiding probate. And probate is the dun-dun-dun. That is the word that you never want to hear if you own property and it's going to have to go through probate. It takes forever. It's expensive, and it's just not a good thing. And whenever you leave something to probate and to the state and let the state tell you how you're going to handle your property, it's going to spell out not good things for you. So you want to avoid going to probate at all possible costs. Period. That's it. Avoid probate. Number 4 is the reason for having an estate plan and living trust. The 5th reason is another one that you might not think about, is you want to avoid a will contest. So it's true that a will is far more likely to be contested than a revocable living trust, because a will only goes into effect when a person dies, whereas a revocable living trust goes into effect as soon as the trust instrument is signed, and generally lasts for some time after the owner's death too. So you don't want to contest a will, or you want to avoid that happening. So when you have a revocable living trust, you're going to avoid that. So that's reason number 5. And again, another one that you might not have thought about, in the process of thinking about getting a living trust and estate planning. So that's number 5. And then number 6, again, an important one. It's probably lower on the totem pole, but it's an important one, is privacy. And most of us naturally dislike the concept of probate because it is a public process. Like I said, it's state-run, and your information, and theoretically anybody can go into a probate court, and when a person dies, and look at the estate file. You can read the will. You can find out who the relatives and beneficiaries are. You can look at the claim of creditors and the list of assets and all that stuff if something goes through, and even the phone numbers and addresses. So all that is involved in probate, and it's a public process. So if you have a revocable living trust, it's all going to be privatized. So that's really important for some people, and I don't blame you. So, Dave, those are the 6 reasons why it's important to get a living trust, and why, and for all of you out there that own property and have an estate and need to do that, it's very important. It's worth a couple $1,000s that you have to spend on it, because it's going to save you thousands and thousands of dollars down the road when, in the unfortunate event you pass away and your inheritance is given down to the next generation. So that is the answer, Dave. Appreciate the email, and keep those emails coming, people. I got to take a quick break. I'm going to wrap everything up on the other side. And you've been listening to Mike D'Ambrosio on Real Estate Radio Live, RERadiolive.com for any other updates you want. And stick around. I'm going to wrap the show